What's up guys, it's Selka. Welcome to this Bitcoin and Ethereum update. And just before I get into it, as you can see, let me go in the 4-hour chart. The move went in the right direction. Alright, so in my last video, I probably told you that this was going to go up, break the top, and then come back down to break this low as well as this low. And that's exactly what happened. Alright, same thing for Ethereum. Instead, this one I told you that this was already a sell setup, a correction for this impulse down, which will lead to have another impulse down that will at least break this low, at best break this one. All right, and both were broken. So all right, we got the moves, and now in this video I'll tell you what's coming next, as well as explaining a little bit more about the wave theory, since I know many people are joining the channel. Many people know me from Friend Tech as well, from Twitter, and that's why I gotta explain a little bit more about what I'm doing in this channel and how I'm able to forecast those moves, because I don't have a crystal ball. I'm not a magician, but I can surely put the odds in the right way, and that's what I will be explaining in this video. So see you right after the intro. Alright, so we're going to start with Bitcoin, and just like I said in the intro, I was able to forecast this move as a correction, having this as an impulse, which led to this next impulse who broke the low. So it's been weeks since I've talked about this setup. I've been telling you that this will drop. This was an entry, perfect entry to short. This was another setup, perfect to short. Then the take profit was there, the objective was there, and now we're at it. So it was a win for Bitcoin, and it was a win for Ethereum. Ethereum was even cleaner, this setup and this range as the correction. Now, I'll take this moment in this video to explain a little bit more about what to do once you hit target. All right, once the target has been hit, you're wondering what to do, and the answer to this is actually nothing. All right, there's actually nothing you can do once target is hit. All right, the only thing you can do is that if you're in the trade, you'll move stop loss above your or below, if you're shorting the market, below your entry, and you'll take profits, because this is where actually you can take profit when the target has been hit. But what will happen under that low, we have no clue, unless you have a bigger structure in the bigger time frame. For example, this one, we're expecting this as a correction, so we're expecting an up move. Now, unless you see a spike up and a flag, there is nothing to do. You cannot enter a trade. All right, you cannot enter the long. You just need to wait and see what's happening. All right, so remember, right there, I would stay in the trade. I would take a 70% TP. All right, probably something around it. Doesn't matter if it's not 70%, but at least you take profits. You put your entry on stop loss, the entry on break even, and now you wait. There's nothing you can do. And if you see an impulse and a flag, I might get out of the trade, all right, and enter in the long position. If I don't see this, I do nothing. And just like I said, as wave trading users, we cannot do anything if we don't have a correction. So that's just how it works, all right. If you have a move that looks like this, an impulse up, we cannot trade, all right. If you have a move that looks like this, an impulse down, we cannot trade as well. But if you have this move that looks like this afterwards, then we might be able to take a position, because we will understand what is this move, what type of correction it is, and probably get a nice entry for the next impulse down, because 90% the chance of having this next impulse down. Same thing for impulse up. If you get a range afterwards, then you'll expect another impulse down, another impulse up, and we will be able to take the trade of that correction. So if there's no correction, there's no game. We cannot play. All right, so just like it was right there, you had this impulse. It was risky to take the trade off without having setups, and that's why we say or I say, or every wave theory users say, that you should not be entering in a trade without having a setup. This means without having an impulse and a smaller correction in the smaller time frame. Now let me break this down so you understand a little bit better. When you have a drop and a move that looks like a range, and that you're expecting the next move to be a drop, just like it's normal, just like it's supposed to be. Target is there, reminder. Now you're expecting the drop and you're somewhere in there. It is super risky to enter without having a setup. And if you're wondering what is a setup, it's simply in a smaller time frame, an impulse down and a correction. Why is this piece super important? This is super important because 90% of the chance that after a correction you will get another impulse in the same direction as the first one. So why not wait for this one, this little setup in the smaller time frame, this little right there, after an impulse down, to enter the trade, because you know that this has 90% chance or at least to break this low. So this will help you get into the bigger wave, the bigger setup, but also will help you manage your trade so you can put your stop loss under that low, right? And now you'll be safe in case this was a correction for another up. You'll be safe, but if it's not and you've seen it right, you'll be looking for that low, that arrow down. So why not take the trade off a smaller setup? So that's exactly what a setup is. A setup is a smaller drop, smaller impulse down, and a smaller correction that will lead probably 90% chance to another impulse down, right? So if you're looking for that, if you see this and in the bigger picture you have a big drop and a big correction, which is exactly the same thing, I'm drawing exactly the same thing, then you'll find you'll have a lot of chance to be in the trade with the big arrow when it's happening. All right, that's exactly what this setup was, and this was a second setup. All right, this was a little bit bigger, so that's less risky than the smaller one, but the risk to reward was a little bit lower. All right, so this was also a correction. It's pretty obvious. You have a range after an impulse down. This means that you'll probably have another impulse down, and breaking that low means also that you have a lot of probability to break that one, since this whole piece was a correction. So I don't know if it makes sense to you, but every correction you have right there, this one, every correction that you have is a correction in a different time frame. All right, and the bigger time frame is the direction that you should have in mind. All right, you should have this direction in mind, since the bigger correction is this one, right? And it's aiming for the drop. But those smaller corrections are set up to enter the trade. Or there are also trades if you're trying to trade in these time frames. So if I go in the 5-minute chart or 15-minute chart, I could be taking the buy right there for this correction, for this impulse, and expect it to break the top. I could be taking the buy. I could be taking the sell and taking all my profits right there, because that's the low of the correction. But the main goal of me saying this is that those small corrections can also be helpful for you to enter a trade in the bigger time frame. So if you're expecting this drop in the bigger time frame, take a short right there, take some profit around there, all right, or around there, no matter where. Protect your trade, then let it go, because the bigger time frame you're looking for this drop. All right, that's the only purpose. So if you enter on the right there, you risk having a flag and another push up to get you out of the trade. If you enter right there, you risk of having a bigger correction and get you out of the trade, right? But if you enter on a correction, you have less risk and more chance to be in the trade, and it can also give you another opportunity to load up in the same trade. So there's some wave trader that actually get in every sell setup they have when they see a pattern like this. They see a drop, a correction, so this sell setup they will enter a bit, this one they will enter a bit, and they will end up with a bigger position size around there, a stop loss a little under to cover their trade so they don't lose it. If it goes up, they lose nothing, and a bigger take profit, because actually they went in right there, and even in the smaller time frame sometimes a little bit on top. All right, so that's the whole purpose of what I wanted to say. From that point, you can get small entry. That's what we call buy setups. That's how we enter a trade. It's on the smaller time frame. Same concept. You get a drop, impulse, smaller correction, next impulse. All right, it's exactly the same concept, but on the smaller time frame. Now, just like right there, when I told you not to buy because there is no setup, right there, I cannot tell you to buy because there is no setup. So right there, you have just a sharp move up. Even in the smaller time frame, you have a sharp move up, a sharp move down. Sorry. In the smaller time frame, you have a sharp move down. In smaller time frame also. So the only trade you have is probably in the 1 minute chart. This being an A move, this being a B wave, and this being a C wave for another drop. This is the only trade that you have, and it's in the smaller time frame. Just like this one was an ABC, this one was an ABC, this one was an ABC. All right, these are small correction. That means drop, but these are smaller time frames, so it's super risky. You should not be doing that. All right, simply because if it's range, it will take minutes, and if it goes up after a range, which is a correction, then you'll be out of the trade without even noticing that it was not going your way. All right, so right there, exactly right there, ABC, this probably will drop, but if it keeps ranging right there, this means another push, maybe before dropping or before a bigger structure. So it's not a trade that you should be taking it the 1 minute chart at least. I do think it will drop a little bit more, but it doesn't matter. It's just the concept behind it that I want to tell you. As long as there is no correction in the bigger time frame, nothing that looks like this or nothing that looks like this, an impulse and a correction, because these are the two different way to move a structure. Either a range, which means having another low because you're having another impulse down before, or an up move, which means that this is an A move, this will be a correction for that up move, and then means another up move in the same direction. Right? It doesn't mean that this whole ABC right there would not be a drop. It simply means that unless you have something like this, you cannot go up. Right? So if we want Ethereum to go up, for example, you'll have an impulse and a correction, and this will be an entry to go up. If you see it keep ranging the same way it was right there, or it was right there, then we'll go lower, and we can do that until we reach all-time low if we want. If the market wants, we don't control it, but we gotta keep in mind that, to me, this whole piece looks like a correction after an impulse up, so I'll be expecting another impulse up. Just like this one had an impulse, a move low, a slow that looks like a correction, we've got the other impulse to break the top. And this concept works in every time frame, and that's what is the wave theory. That's how I made my analysis. That's how I'm able to forecast all these moves since 8 months ago. That's how I do it, and I've been doing it on Discord, Telegram, to my friends, sharing analysis, even on FriendTech, and everything been doing pretty well. And the only reason why is because I truly understand the concept of impulse and correction in the market, and that's basically how it works. Right? You got an impulse, euphoria, people buying. Some are taking profits, and people are either coming back at this range, all right, this retracement, either they are buying right there, and some are even selling because there's a FUD. That's why this move becomes slow, and once everything is done, the price reach a certain price, basically, that makes people want to buy back, and usually this is where it starts the next wave. That's theoretically an easier way to see it. But it's not, of course, it's more complex than that. It's all psychology, but that's how I could explain it in a way that you'll probably understand. So, impulse, people taking profit, you get some small correction. That means people want to get out. They didn't get out in there. They want to get out there. Another drop. But at the end, this whole piece is when it's done, you're reaching a price where a buyer will come back, take the opportunity to move the price up again. And then that's how you end up with an impulse, correction, impulse. So that's what I wanted to say today. Nothing to do on Ethereum. Actually, there's nothing to do. Bitcoin, there's nothing to do. But what should you expect next, right? Next, I'm either expecting, like I've been saying for the last weeks, either a correction for another drop, a bigger correction, because those are pretty small. Right, either a bigger correction for a drop, or an up move, an impulse up move. All right. So the reason why I'll be expecting either of both. So first one is that if this move is an impulse, this is an A move, and this is a B wave. This means that this drop is a C wave. This complete a correction called a running flat. All right. Let me just zoom in. This completes a correction, which is called a running flat, and this would be an up move. All right. So let me redo it. I've talked about it many times. If this whole piece, this whole correction right there, this move is a correction with an A wave, a B wave, and a C wave, then you're having this impulse first, so I'm expecting this impulse to match. Right, this will complete this correction, and it will be the end of the move. Breaking this low will mean that it will be the end of this whole piece. All right. Now the second scenario is that this is simply a big impulse. All right. With this being a correction in intern, doesn't matter. It's within this impulse. These moves are also don't matter. They are matching with nothing actually. So this will be the whole impulse. This will be an A move. I'm expecting a correction for a B wave, then a drop for a C wave, then an up move to match this first impulse. All right. This is just we're just earlier in the structure if this is something like this. And if it's the previous scenario, then we'll just break the top straight up. All right. So in both cases, I'm looking to buy in this area. All right. This area to me is a buy to either retest the top or have a slow move. Then whenever we will get this slow move, we'll see if we act, if we aim for a drop or not. All right. So in both cases, this is what I'm expecting for Bitcoin, and for Ethereum, looks more like this whole piece will come and break the top. Right, this is the main scenario. There's actually just this scenario. Second one is having a correction, right? But it's a different scenario because having this correction could mean that you're either gonna drop to break the low, all right? It can happen, not saying it will happen, but it can happen, or make a bigger correction and break the top. So it's either this correction is not done or it's done, all right? In both cases, whenever it will be done, it will be breaking the top. The scenario where we break that low means that this whole impulse down, this whole piece right there was a correction for this impulse down, and this could break the low, just like Solana is trying to do. It can happen, all right? Just Solana is pretty clean. You have a drop. This ABC correction means that you're getting another drop to break the low. So I would not be surprised if Solana break the low, because it didn't range right there for another push. But Ethereum actually ranged right there which could lead to another push. That's why I'm not super bearish on Ethereum compared to Solana. So I think Ethereum will go up, but it will be crucial. So if you are not familiar with either it will go down or up regarding this structure, I highly advise you to put that trend like this. And if you see it go under the trend and range, give it a flag or some sort of correction, then you'll probably be breaking the low. All right. If it bounces over the trend, gives a flag, then we're probably going to retest the top. So if you are not familiar with correction and you are not sure which one will happen, take a screenshot of this, take a look at this, keep a screenshot with you. And as long as you don't have either of these scenarios, nothing will happen, and I'm pretty sure of it, because people are trading this trend line, and this is when we'll see if it goes up or down. Whenever we'll have a reaction of this trend line, we will know with the wave theory if we're in the correction for a drop, or if we're bouncing off, giving a correction for an entry. So we'll take the buy right there if it is, we'll take the sell right there if it's the bearish case. That's for Ethereum. And Bitcoin, actually same thing, trend line. All right, put that trend line. If it works, it should. So yeah, above, this is actually the trend line, how you should be doing it. And as long as you're above that low, that's where I told you it was important. As long as you're above the low, which we are, we can have an impulse, a flag, and this can lead to having this running flat. But if we get under that low, I'm pretty sure we're gonna give a bigger correction, and this will probably be the second scenario that I talk about, something like this. All right, so now that you know that, these are the scenarios for a bigger time frame. But actually in the smaller time frame, I cannot tell what will happen. You have nothing right there and you have nothing right there, right? So this is just an update to let you know that actually this move was planned. We saw this move from weeks ago, because as long as you have correction, you'll have another impulse in the same direction as the first one, and that's how we trade it, right? And the smaller correction and smaller time frame are just opportunity for you to get into the trade safely. Those are buy setups or sell setups. This gives you an opportunity to get into the sell without risking too much, without getting in on an impulse, on the green impulse, without risking too much. This one was another opportunity. So I'm bullish on Bitcoin and Ethereum. I just wanted a reaction right there, because as long as it's ranging or dropping, then it will surely not go up. So I want to see an up move, an impulse, and then a flag, and I'll act when I see this. If I don't see this, I'm not acting. So it's just how it works. If I don't see an impulse and a flag to buy, all right, I'm simply not acting if I don't see this. So that's about it for today, guys. I hope you enjoyed this little concept notion of impulse correction. That's what I wanted to talk today. So for those that don't know about the wave theory and that has been following me for some time, or following me on Twitter, Friendtech, Discord, that's how it works. That's how I do it, and that's how I'm able to forecast the market.